Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, July 31st, 2016. I hope you guys are having a fantastic weekend. Got back a little bit early from Lake Placid, so I wanted to get this all done with. So Thursday, we saw some weakness that was bid back up. I had mentioned that they may have tried and hold things up going into the end of the month. That's pretty much what they did, but we went nowhere. And what it's really going on is that the fractured markets they're just extending and extending, and they're going to correct themselves. There's that's the sure thing. How they correct is the question mark. I do believe that they're going to be correcting to the downside, and here's one of my reasons right here. This is the Russell 2000. You can see we have the bearish divergences in place, very overbought. This is on a daily chart as well. And we're running into the 78% retracement. So the most important part of this chart is not the bearish divergences or the overextended momentum or the 78% retracement. What is important is here are the previous highs at 1298.89. It's at 122.59. So the S&P and the Dow are at new all-time highs, and you have the small caps that are not even close to all-time highs. Very overextended and also showing bearish divergences. So that's the one fracture in the market. Second one, Dow closes down 24. We've been seeing these indexes run different ways going on 3 days now, and we had the S&P, I think it was up 3, and the Dow was down 24. But in that meantime, what is going on is they're absolutely collapsing volatility. The short-term volatility in the VXX is, I think, was down close to 7% on Friday. So stuff like that, when you see it happening, it doesn't happen at the beginning of an extended run. All this starts taking place at the end of it because nobody's in sync with each other. We still have the elections that are coming that are going to be up in the air, and you're not going to get a lot of people putting big bets in going in because not knowing who's going to be the president and who's actually going to be good or bad for the stock market. So we have the indexes running in different directions right now. We know we have the bearish divergences on all the charts. And if we look at the S&P here, this is on a 15-minute chart. This is one of the most extended bearish divergences that I've seen, really, maybe ever. This consolidation right here, this is usually what happens if it's going to consolidate. It consolidates and then for a few days and then breaks out. This has been consolidating since the 20th. So there's not a whole lot of conviction to push this higher right now. Otherwise, we would have been higher. Does it mean that we have to stop? No. But this has been the 2177 has been resistance for quite some time, and I think that this is more of indecision than it is consolidation before the next breakout. And one of the reasons is on the 60-minute chart here, again, very, very extended bearish divergences, very overbought, and this reverse symmetrical triangle pattern, which is really a very, very bearish pattern because these are the types of move that happens up like this and down, straight down. And it traps everybody because everyone thinks it's breaking out, but yet it's just trading at the top of the reverse symmetrical triangle. So can we see some strength Monday? Well, maybe they are going to come back up and try to test the top of this trend line right here, and that would bring us right up, a little bit higher than where we are, maybe 2185. But the thing is that this is still the top of this line, and with the bearish divergences, even if they head higher, it doesn't make things safe because if this pattern is going to play out, which I'm not seeing any reasons why it's not, the next move is coming down to this trend line here, which is all the way below 1950. So the points on the downside are huge. The points on the upside could be fairly minimal. So it's and another thing why I think this pattern is correct is like I've been talking about with the index is running in different directions. They're not in sync, and when one has to carry the other because it's weak, it uses more energy, and what happens is once they run dry, there's no more buyers, and we head straight down. And again, I think that's a lot closer than some people think. But can we head higher Monday? Possibly come up to the top of this, but it's really not needed. And if we head down, I don't think anybody's going to pay attention to it until we start breaking these levels here, and then they're going to panic and head straight down. So again, the pattern is bearish divergences. Indexes are all running really not in tandem. We have volatility or any kind of protection just getting absolutely crushed. So nobody's protected, and we have sentiment at some of the most extreme bullish readings I've ever seen in my life, and all this is lined up for this move to come straight down to this 1950, and in the way that we've seen these things move, I mean, it could be happening. It could happen in days. So it's one of those things where patience is a little bit frustrating, but nothing has really changed. This market is not any safer than it was last week, and on top of that, the patterns are suggesting that the next move is going to be really, really hard into the downside. And you can see on the daily chart, it's now showing bearish divergences on that as well. And when you have all of this that's that's lined up against you, because when the indexes were dropping here, we had the bullish divergences, and that is what kicked off the lows. Well, now we have these bearish divergences, and like I said, I would not be surprised to see these gaps filled before an actual low is put in place, and this low is all the way down at 1865. So that's a little bit more longer out, but right now I would just stick with, listen, this market is it's not safe, but it also can frustrate some people a little bit longer. And when it does actually break, it's probably going to move down in a very, very, very fast manner, not letting anybody in on the short side or out from the long side, and it's just going to be a whole bunch of panic. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.